Saturday, October 26, 2019, Maneco 64, home of alternative economics and contrarian views. Before I start today, I'd like to thank everyone that has an interest in my channel. I've just gone over 26,000 subscribers 4 years ago almost when I started the channel. Yeah, it was difficult to picture that 26,000 subscribers. But one thing I would say, if you're thinking of having your YouTube channel, is to pick a subject that you love, something that you're kind of obsessed about, something that you're really interested in, and go for it, right? And stay at it. Have discipline. You can't, it might look easy for me now to have all these subscribers and get all the views that I do get, but it's been a lot of hard work. Preparing mentally, having the ideas about what to talk about. It's not always easy to get subjects. And one thing I've learned, of course, is that you can go over some subjects that you've gone in the past because you're getting always new viewers. And even the existing viewers and subscribers, they don't mind getting refreshed about subjects that you might not have covered recently. Today, I want to talk about money, currency, the difference between money and currency. And before I start, I'd like to recommend a book that I think, a little bit like Henry Ford said, that if the American people knew how the monetary system of their country worked, there'd be a revolution the next day. And I think that applies still today, of course, even more. And it applies to the rest of the world. Why is that? Well, because the rest of the world is under the monetary control still of what happened at Bretton Woods in 1944 when the dollar became the leader, the reserve currency. So the system now is dependent on the dollar. So yeah, it applies to every country in the world because every country is still in this dollar-based system, which is now really the petrodollar ever since Nixon closed the gold window in '71. And the book is this one here by Murray and Rothbard. Murray Rothbard. What has government done to our money? And the case for 100% gold dollar, right? I would add that to this title, what has government and the bankers done to our money? And they've been able to do a lot to it, corrupt it, mainly because money is always portrayed as a very technical subject, very complicated, right? So the general public, of course, have a great interest in money. Everyone does. Money, some people say, makes the world go round. I would say that money facilitates exchange, and exchange is what makes the world go round. And Murray Rothbard talks about all these things in this book. I'm not going to go through the book, but that's a book that I highly recommend people read, and they will have their Henry Ford moment, right, when they read this book. And that's probably why this book is not very widely known in academic circles. Even in schools, people don't talk about that. I remember in high school, when I went to high school in Brazil, and I went to the American school of Rio, so it was an American high school, and one of our teachers was in economics class, and we were talking about money, and she said no one really knows what money is. There's a lot of debate about it. So that's, if she had given us this book by Murray Rothbard, I think we would have found out what money was. But that's not in the agenda. You see, this is a subversive book for the powers that be, for the bankers, and I would argue for governments and politicians. Politicians know very little about it. as well. But so they are kind of pushed by the bankers who know a lot about it, and the central bankers, right? So that's the book I recommend. You might be able to find a free PDF online at Mises.org. Or you could also buy the book from the Mises website, mises.org. That's the website for the Mises Institute in Auburn, Alabama. It's one of the major centers of the Austrian School of Economics learning anywhere in the world. I remember I went there in 2002, actually, with my wife. That's when I just started getting into the Austrian School of Economics. It's when I started buying or exchanging my paper currency for real money, for gold and silver, right? And we went to the Mises Institute 20th anniversary celebration. It was like a 3-day event. You had lectures, a lot of speakers, dinners. It was really great. My wife enjoyed it. Probably not as much as me, but she likes all this too now. She's awakened to the fraudulent nature of our monetary system. And I even had the pleasure and honor to meet Ron Paul there at the conference. He made a speech at one of the final luncheon, which was held at the institute outside. It was a nice, beautiful day. But he was in one of the lectures that I was in. And after the lecture finished, I went up to him and I had a chat with Ron Paul. And we were talking about Alan Greenspan's essay that he wrote in 1966 about gold and economic freedom. And Ron Paul told me an interesting story about that. He said that he approached him once in Congress. Ron Paul approached Alan Greenspan because, as you know, Ron Paul was in the Finance Committee in the House. So twice every year, the chairman of the Federal Reserve goes for the testimony to the House Committee, Banking and Finance Committee, I think. It's called the Humphrey Hawkins testimony. And he told me the story that one year he took a copy of the essay, Gold and Economic Freedom. And he went up to Alan Greenspan after the testimony and said, Mr. Greenspan, do you still believe in everything you wrote in that essay? He said, I do, 100%. And he said, so why don't you push for it? And he said, well, it's all politics. It's all politics. The people want the cheap money. The people want to have things they can't afford, right? And that's how the system thrives, the debt-based system. So that's what he told Ron Paul. I highly recommend people also read Gold and Economic Freedom essay by Alan Greenspan. You can find it anywhere online. Just Google Alan Greenspan, Gold and Economic Freedom. The gist of that essay, I would say, is that gold is a protector of individuals' rights of private property, because gold basically puts an anchor, or it disciplines politicians, because in a free market where you have sound money, and where the market decides what money is going to be, and usually it is gold and silver. We could argue about competitors to gold and silver, like Bitcoin or other cryptocurrencies and any other thing, right? And I think I'm all for it. I'm for competition, of course, and free markets, and letting the general public and the market decide what they want to use for money. But in that essay, what Greenspan said is that you take out the market-based money from the system and you issue fiat paper money, legal tender money, right? And you give control to the politicians and the bankers. And that was the lesson from Gold and Economic Freedom. That's what Greenspan was trying to tell. people, and that's why he said in that essay that statists, welfare or warfare statists, any politician who's for big government and for interference, they hate gold, right? Because gold doesn't allow them to spend as much as they want. Because if they start spending a lot under a sound money system, free market-based system, the market is going to twig onto it, and people are going to call in their money from the bank, their gold, their silver, and interest rates rise. And then politicians, unless they start borrowing in the back of on the back of taxpayer, they can't get taxes anymore, right? So that's the importance of that essay. So I guess it gives you an idea about the difference between a sound money system and a fiat based money system. And it's no wonder that ever since World War I, 1914, and here I'm talking not just about the US, I'm also talking about Europe and the Western world. We've seen the world go from a very prosperous period, let's say from 1820s to 1914. Yes, there were some wars there in between, but no major world wars. Of course, there was the Civil War in the US, but it was overall a very prosperous period. A lot of industrial development, right? Economic development. Some would even argue a lot of world trade went on, and that was under a sound money system. One example of that was that after the end of the Napoleonic Wars, I think the national debt of the UK was around 700 million pounds. That was in 1824 or thereabouts. And just before the breakout of World War I in 1914, the British had paid that debt down to around 600 million. So you had prosperity, development, and the debt went down, right? The national debt went down. But you had a sound money system where money was not the end all. Money was what facilitated the trade, was what facilitated development, industrial progress, right? It wasn't something that was created out of thin air. There wasn't this Keynesian fallacy now that we have nowadays that just creating debt will make the world richer. And I think, and then we come to where we are now. We've been in this system gradually. It's been gradually becoming a debt-based paper system over the last 105 years or so. Because what happened with the breakout of World War I? Well, a lot of the major powers in Europe, they realized that they had to go off the gold standard. So they suspended the convertibility of the paper currency, because paper currency that we use today, or we might not use it, might be a bank card or digital. That was just a receipt for real money, gold and silver in the bank, right? That you decided to leave in the bank. Maybe they were paying interest, so you didn't need the money. You had spare money, so you thought it would be advantageous to you to leave it in the bank. You looked at the risks, you know, the risk and reward, and you thought, oh yeah, I want to get 3-4% on this extra money, and they gave you this receipt, a $20 note or a $100 note or a £5 note, and if you needed that money, you could go to the bank and take your money back, right? Your specie, as they called it. Unfortunately, with World War I, what happened is these countries, the major countries, England, France, Germany, as it has been done in the past in times of wars, a lot of things that are normal are suspended, and they suspended the redeemability, and ever since then, people have been accepting these pieces of paper as money, even though they're not money, right? In the U.S., it took longer, of course, because the U.S. only went off a domestic gold standard in 1933 when there were the bank holidays. What were the bank holidays? Well, when FDR took over in March of 1933, the U.S. banking system was melting down. He closed the banks for a week or so, and he banned people from taking their gold out. He banned gold ownership because that's what was money back then. But why were the banks going under? Well, because they issued too many receipts without backing, and that's all it was. A lot of people blame gold for the problems, but you can't blame gold for fraudulent activity, right? And coming to fraud, I'll talk a little bit about the decision this week here in the UK by the Serious Fraud Office, which is a government department that's supposed to crack down on fraud. And they decided to not prosecute the Bank of England and the major banks in the City of London for their fraudulent activities during the great financial crisis of '08. What was that fraudulent activity? Well, they lied about interest rates, the LIBOR rates, right? LIBOR, that's not what it means, but LIBOR basically means London Interbank Offered Rate, and it's the interest rate at which international banks lend others, borrow and lend in London, right? And during the great financial crisis, we knew all the banks were going to go under. So people didn't want to deal with them. So the rates spiked to massive levels. And so the Bank of England encouraged these banks to basically lie about their rates, because these rates are published daily, right? Around in the morning in London. They used to call it the LIBOR fixing. I'm not sure they even do it anymore. But all that did, it gave the general public the impression that everything was great. So they left their money in this fraudulent system. So yeah, what was the SFO, Serious Fraud Office's excuse for letting the Bank of England and these big international banks off the hook? Well, their excuse is that it will create too much havoc and economic woes to punish the central bank, right? The Bank of England. And the Bank of England is supposed to be a very proper institution, right? They're not supposed to be, how can I say, involved in fraudulent activity. But there you go. There's also a current case in the U.S. I think it's the DOJ. They've indicted J.P. Morgan precious metals dealer, precious metals traders, gold and silver, who are members of the LBMA, which is the London Bullion Market Association, which is basically an arm of the Bank of England as well. The Bank of England uses the LBMA to lease the gold that it holds for other countries. And it's been found that these people are manipulating also the price of gold. So, but you get the idea. The Bank of England will never be punished, but they're losing credibility, in my opinion. But not only the Bank of England is losing credibility, but other central banks as well. The Federal Reserve, the ECB, the Bank of Japan, the Swiss National Bank, and even central bankers are criticizing them. The ECB, for example, in their meeting in September, it was the meeting where Mario Draghi decided to cut rates again further into negative territory, where he announced QE. It looks like there was a lot of division within the council, ECB council, whatever they call the group that decides on monetary policy. I think the Germans, the Austrians, the Dutch were very much against it. So we're starting to see conflict there. They're not playing the same game. I think a lot of the central bankers are realizing that they're never going to be able to get out of this course that they took in 2008 to print trillions upon trillions to save a corrupt banking system, corrupt monetary system. The Federal Reserve tried to go back to normal policy. You saw what happened, right? They went back up to around 2.5%. They started doing quantitative tightening, which is the inverse of printing money. And they had to stop last year. And now they're reversing very quickly. They're looking to cut rates again this week on Wednesday, with the stock market at all-time highs, with the economy doing really well, right? So they're losing credibility. And Bank of England as well, losing credibility. Not only because they've been doing QE as well, but because it looks like they've been involved in fraudulent activity, even though I can't really say that definitively, because the Serious Fraud Office in the UK has decided not to punish them, right? But it doesn't mean to say that everything is fine. So this is where the difference between money and currency becomes really important, because money is basically the most marketable commodity, as the Austrian school calls it. So I'll quickly go through their theory. Their theory is that in a not very highly evolved society, people just barter, right? And then when communities grow, there's more specializations, different people, and also different places produce different products, and barter becomes more and more difficult, but they find a commodity that's the most marketable commodity that everyone would accept, and that's what money is. So, and that's what money is, right? But what government has done is to make laws, like legal tender laws, to force people to accept their currency, right? And that's the difference between money and currency. Even though, let's say this quarter, 1964 quarter here, silver quarter, is money and was also currency. They had to ban that from circulating as currency. Well, they didn't even have to ban it, because it's worth much more than a quarter today, than 25 cents. You'd be stupid to pay for something that's a quarter with this coin, right? So, so that's the difference. Gold and silver are money and currency, but the currency that we have today, the paper currency, the legal tender currency, is not really money. And I think with people starting to lose confidence in the central banks, and why do I talk about the central banks? Well, because the central banks have been given monopoly power to issue that currency, right? They're losing more and more credibility, right? The central banks. And what do you do with an asset that you have that is an institution's liability that is losing a lot of confidence? Well, you get rid of it because you don't have any confidence in it. And that's when you start getting the value of that currency go down, when people start losing confidence in it. I think, of course, we're still in the beginning stages of that, but I think it's only going to get worse. And how will that be translated in the real world? Well, that will mean that the currencies of these central banks are going to be worth less and less, because the demand for that currency is going to go down. And all that means is that people won't want to hold that. They will want to exchange it for things that they perceive to have more value and will have more value in the future. So that's what I wanted to talk about today. That's where I see the system at the moment. The other thing that is showing me that things are not great and could get worse for these national or paper currencies is the volatility in things like cryptocurrencies and precious metals. I think it's more a reflection of the, how can I say, the troubles in these national currencies than troubles in cryptocurrencies or precious metals. It's not cryptocurrencies or precious metals that are vulnerable. It's the national currencies that are vulnerable. And so there's a lot of, and there's so much national currency flowing around out there that you're gonna, and there's a limited supply of precious metals and cryptocurrency. So we're gonna see these massive swings. But in the longer term, I think personally, I would wanna hold on to my precious metals and cryptocurrencies. As for cryptocurrencies versus precious metals, that's for you to decide. I have my own opinions about it. I see cryptocurrencies a little more speculative, mainly because it still is in its infancy, while precious metals is gold and silver are kind of ingrained in humans, the human psyche and DNA, right? So that's what I wanted to talk about today. It's gone on a little longer than I thought it would, but it is the weekend. So if you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide. If you haven't subscribed to the channel yet, think about subscribing. Make sure you also hit that little notification bell above if you're interested in my videos, as I make a video almost every day. So you'll be notified when my video comes out. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great weekend. Take care. Bye.